Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. In today's presentation, we are going to discuss three things. One, outlook on global and Indian equity market. Second, why yen importers should hedge their uh, yen import payments. And finally, outlook on rupee. Last week, Sensex touched 80,000 and everyone wanted to know where is Indian market going forward. So, pehle, let us discuss that. In the first part, we have to understand that whenever the profitability of Nifty 50 companies are increasing and along with their if their market cap is increasing, then we can say that the rise in equity market is not overstretched. Now let us understand that in number form. In FY19 निफ्टी 50 के जो टॉप 50 कंपनीज है उनका प्रॉफिटेबिलिटी was at 3,507 billion rupees, which has grown by 18% CAGR till FY24. The number stands at 7,931 billion rupees. Similarly, if you see the market cap, that has also increased by 18% CGR. Apart from that, there are three other key factors which can take the market at higher level. First, solid economic growth. Second, in budget, we are expecting that the government will announce some major decision which are pro Indian economy growth को लेके जाएंगे. Third है stable government at the center. Globally, also we have seen that US ka data are coming on a weaker side. Last week unemployment data came which was at 4.1%, which is highest since 2021, June 2021. These are all indication that Fed is going to aggressively cut interest rate in coming months. If that happens, equity market across the globe will continue to rise. Dow Jones has strong support level at 38,800 and we are expecting Dow Jones to move towards 40,500 kind of levels from an existing level of 39,375. Nifty has a strong support near 24,000 and 23,800. We are expecting Nifty to consolidate between 23,800 on the lower side and 24,600 on the higher side. Ideal investment mantra is you sell high and buy low. So there are few sectors which are overstretched and there are few sectors which have underperformed as compared to overall market. So sectors like chemical, agrochemical and fertilizers have not done well in last 1.5 years. Similarly, IT sector was also in laggard. So we will tell investor that they should think of rebalancing their portfolio by booking profits on sectors which have overstretched and try to allocate some fund in sectors like agrochemical, fertilizers and IT. Now let us discuss an important piece of advice for all importers who are importing in Japanese currency. On Friday, USDJPY had given a sell confirmation in the chart. Now we are expecting that USDJPY is going to move towards 160 and 158 from a current level of 160.74. The reason why we expect that, there are three important reasons. Pehla, US economic data are coming on a negative side. Second, probability is increasing that Bank of Japan might intervene in coming days. Second, apart from that, probability of them increasing the interest rate is also increasing. If that happens, then JPY INR, which is currently trading near 51.90 kind of a level, can move towards 52.75 kind of level. So we will suggest all importers to hedge for at least 1 month imports. Now let us discuss outlook on rupee. Last week, all major data of US were showing that US economy is not performing well, mainly their manufacturing data and job data, because of which we are expecting dollar index to move towards 103.50 to 102.50 in coming days from a current level of 104.80. If that happens, that will be positive for all emerging market currencies. Apart from that, 10-year US yield, USDJPY and USDCNH, all of them had given a clear-cut sell signal. If that happens, it is an indication that all Asian currencies are going to perform well in coming days. Based on above data point, we can clearly conclude that 8350 to 8355 is going to act as a very strong resistance for the pair, and the pair is likely to move towards 8330 to 8320 kind of levels in coming days. Now let us discuss strategy for thin margin exporters like agri exporter, chemical exporters. As we are expecting that the rupee is going to move towards 8330 to 8320 kind of level, we will suggest all thin margin exporters that between 8345 to 8350 they should hedge 100% on a back-to-back basis. Now let us discuss strategy for thick margin exporters like textile exporters or engineering exporters. For them, if they are hedging under anticipation basis, then near to 8350 they should maintain a hedge ratio of 60 to 65%. If they are hedging under confirm order basis, they can maintain a hedge ratio of 80%. Now let us discuss strategy for importers. 8350 to 8360 is going to act as a strong resistance for rupee. So ideally importers should not cover aggressively. Near to 8330 to 35 they can cover 50% of the imports which are due for next 1 month. For remaining 50% they can target lower level of 8310 to 8320. With this I will end my today's presentation. Jai Hind, namaskar, फिर मिलेंगे next week. Thank you.